Hey everyone, Dan here. We are about 3:30 in the afternoon on Tuesday, March 23rd. Wanted to take a look at some of the stocks that we've been tracking. Before we get into the video, if you enjoy these analyses, please hit the like and subscribe buttons. It helps a lot. And also feel free to leave comments below. I don't go through them every day, but I go through them every week, and I will respond to each of the comments once I get it. So start things off with HOFV, which we covered in a video yesterday. And, at that time, we were looking for it to follow this channel, which basically could have brought it, to $10 in the near future. But it fell out of that channel basically at open today and just has had a hard time kind of building any strength since then. And so my cautionary tale here would basically be we've completed one sad face already. The sad face pattern from open yesterday through basically close today. And what I would be cautious about is if it continues and completes a reversal all the way down to here, to basically the 284-ish level, and does this full wild jump up and then retracement back down. So this 38.58 that we had drawn in yesterday, it's bouncing off that right now. And, if it can't hold that, then I would be a bit concerned. There's probably a little bit of support at 353 and maybe again a little bit at 314. But I think, if you break through that 385, you're probably actually just coming down to 285 to 270, something like that. And it would just have been this entire full wild swing for nothing. I guess other than folks who played all of this price action up, then, good for you, obviously. But as you see, it's trying to bounce off of this. So we'll see if it actually gets any significant building off of there, or if it's just sort of a little bit of a dead cat bounce, if you will. CCIV has had a pretty down day. It's basically what we were looking for yesterday was if it could hold some strength at this level, 26.89, that it would essentially flag out from here on this white trend line. But it has continued to fall through my bearish price zone for the week, and we'll see. There's 22.96 there for potential support, so I would look for it to bounce at that zone at least. But this is not a great looking position for CCIV at the moment. Let's get rid of this since it's not gonna do anything for us there, and we can also get rid of the old channel because that one's been broken for a while. So let's look at this sort of down channel that we have going and see sort of what might be forming here. So, that could potentially lead us right into that 22.96 area. It maybe would give us some lift for a bounce to head back up to this 25.23, which it has been hugging for a while. So, we did say that we wouldn't be surprised if it kind of did some price action above 25.23 and came back down to it, and then had some price action below 25.23 and came back up to it. So look for that. It's really going to depend in the coming days what CCIV wants to do off of that 25.23 mark, because I think that it will keep coming back to it. So again, I would expect to bounce as low as 22.96, but we may just see sort of like a swoop around here right now, coming back to this 25.23. For GME is also, in this bearish zone at the moment, and it just hasn't really been able to get anything going of substance. It's basically, it was in this channel previously that we have drawn back here, and it just consolidated and just couldn't hold anything, continued to drop down, and now it's sort of consolidating. Again, it's in this yellow cushion of support, so we've been sort of saying that, that should give some level of stability, but, it's still, I would be aware that there's the potential that, it could obviously fall through this cushion. And so just be very cautious of what's happening at all these levels of support, and if it can actually get kind of like a fundamental foothold on anything and push off, because right now all that we're seeing it do is kind of get caught in those zones but not have any sort of buying pressure to build off of there. IPOE dropped down today to our previous sort of low zone, this 1735-ish, I think it is. Yeah, 1735. So we'll see if it gets caught there. I mean, obviously the entire market is having a tough day. It's contributing to a lot of this. But, if we can't get a bounce here, then I don't even know if we have a zone drawn in below. No, we don't. So, we'd probably look for something just before 17 to catch it, like something right about here, 1705. But, we might have a bit of a fall through the $17 mark if it can't bounce off of where it's at right now. You see it dipping below there a little bit at the moment. AMC has, this is just what's happening today. Everything is kind of falling off a cliff in conjunction with the entire market. So it too has fallen through my bearish zone and is trying to get caught by these various levels of support. Just know that it's going to fall pretty hard out of the 10s if it can't hold that 1009, and fall pretty far into the 9s before it has any potential hope of getting caught, like under 950. So you'd have like about a 50-60 cent swing, which with the price of the stock is a pretty big percentage, if it can't at least hold these yellow zones. Palantir, again, similar. Palantir has the issue where it can't get off this 24.28, and the biggest risk there is that eventually the buying pressure that was like drawing it back to 24.28 and was helping it sort of build some momentum off of 24.28, that buying pressure just kind of runs out eventually, and prevents the stock from like pushing off that level again. So that's the risk when something keeps returning to the same zone over and over and over again. But we'll have to see. And obviously when the market itself stabilizes a bit, that'll kind of give us better information around what's actually happening with each of these individual stocks versus just the influence that they're getting caught up in the overall scheme of things. All right, that'll do it for this one. Thanks for watching, and I'll see you all in the next video.